What's up, everybody? My name is Joe Brown, and this is Heresy Financial. Today, I want to talk with you guys about the balance sheets of corporations and why you might start seeing corporate balance sheets starting to hold Bitcoin more and more in the future, and why it actually presents a really strategic opportunity to buy companies that are mispriced, specifically due to generally accepted accounting principles and how earnings are reported, specifically again for companies that are holding Bitcoin on their balance sheets. Ready? Let's dive in. Little bit of a background here. When publicly traded corporations report their earnings every quarter, they have to do so under something called Generally Accepted Accounting Principles, GAAP, also called GAAP. And this is simply a set of rules that everybody has agreed to on how to report things like gains and losses and sales and purchases in a way that is consistent across the economy, across the nation, and in many places around the world, so that you don't have companies just saying, hey, we had a loss here or a profit here without any real numbers to back it up. The problem is that these generally accepted accounting principles were not created with cryptocurrencies in mind. This has led to some, let's just say, complicated reporting issues with corporate balance sheets that have Bitcoin. Now, in the future, my guess is that cryptocurrencies will probably just have to be listed as a currency like any other current foreign currency would be listed on a corporate balance sheet. That's not allowed today. You might also be thinking that it should just be listed as a financial asset, because that's a very regular category. But the definition of a financial asset for, again, generally accepted accounting principles, you would need ownership in an entity or entitlement to interest, dividends, or cash flow that it would produce over time. And of course, none of those apply to Bitcoin. This has led corporations to have to list it for accounting purposes as an indefinite-lived intangible asset. This is the way that MicroStrategy, which this is the chart of MicroStrategy behind me, and by the way, if you've noticed my charts have changed on my screen recently, it's because I've been using TradingView, my charting software recently, and I really have been enjoying it. If you want to try it out, use my link in the description below. You'll get $30 towards an upgraded plan. But because Bitcoin doesn't fit into any of the other categories, this is what they're left with reporting it as, an indefinite-lived intangible asset. And it provides some accounting challenges, actually. Take your own balance sheet personally. Let's say you bought Bitcoin, and let's say you spent $10,000 on Bitcoin. Subsequently, the price of Bitcoin falls to $5,000, you just hold it, comes back up to $10,000, you sell it. Did you have a gain or a loss? Well, neither. You bought it at 10, you sold it at 10. No gain, no loss. The IRS does not care what happens in between the time you bought it and sold it. That's the only thing they're worried about, is what's the difference between what you bought or sold it at. Similarly, you buy it at 10, goes up to 15, then comes back down to 10, you sell it at 10. You bought it at 10, you sold it at 10. Doesn't matter what it did in between. Similarly, if you buy it at 10, sell it at 5, you lost 5 on it. The IRS cares about that. You have a $5,000 loss. Or you buy it at 10, you sell it at 15, you've got a $5,000 gain. The only thing they care about is the difference between where you bought it, where you sold it. That's known as realized gains or losses. They do not watch unrealized gains or losses. Now, this is not true for corporations who hold Bitcoin on their balance sheets and classify it as an indefinite-lived intangible asset on their balance sheets for GAAP purposes. If a corporation puts Bitcoin on their balance sheet and subsequently the price of Bitcoin goes down, whether or not they sell it, unrealized losses are reportable under generally accepted accounting principles. So if the corporation, let's say MicroStrategy or Tesla, let's just for ease of numbers, let's say they make $1 million just from their regular business, but they also have an unrealized loss in Bitcoin of $1 million. They will have to report that they didn't make any money because they have an unrealized loss in Bitcoin that offsets their other gains. Because even though that loss in Bitcoin is unrealized, they still have to report it as if they realized it, as if it's a real loss. Now, the downside to this is that that doesn't apply for tax purposes. The IRS is not going to allow them to deduct that. It's not going to be, it would be a deferred loss. So it's like they're just kind of like holding those losses back until they finally sell it someday. Now, here's where things get a little bit tricky. If they bought Bitcoin and the price goes up instead of down, they do not report that as gains. The only way to see gains from an accounting perspective, when a company reports their earnings, the only way to see gains from Bitcoin is to actually sell the Bitcoin and realize the gain. This is probably a big reason why Tesla sold some of their Bitcoin last quarter, because they knew that if it goes up, the only way we can show that we had gains from that is to actually sell some of it. If it goes down, it's going to show up as a loss regardless of whether we sell it or not. This means that probably not for MicroStrategy and Tesla just because their names are so big, but as other corporations start to look at this, they're going to notice an opportunity to buy Bitcoin and capitalize on the volatility, because when it goes down, that means that they're going to be reporting much worse numbers than their actual business would suggest that they could produce, meaning that the market will likely punish them for having worse numbers, and you could see corporations go on sale simply due to the accounting gimmick of having to report unrealized losses but not being able to report unrealized gains, which would give insiders the opportunity to load up on more shares if they're looking for an opportunity to do that at a discount. Now, this is probably not something that's happening right now, but it's something that I'm watching out for in the future to see if more and more companies start to buy Bitcoin. It might be prudent to watch which companies are doing this. It's probably going to be the smaller ones that are going to be affected more by this, because at least while they hold the Bitcoin, from a reporting standpoint, from an earnings standpoint, a company will be punished for the downsides of Bitcoin and not rewarded for the upsides, which means it's a great strategy for insiders who want an opportunity, a very low risk opportunity, to push their share price down to accumulate more. All you have to do is buy Bitcoin, because if it goes up, it's not going to be able to be reported as a gain. So it's not going to make your share price more frothy. But if it goes down, you get to report a loss. Maybe your share prices fall a bit. You can start buying up at a discount. Now, I'm not a CPA, and I'm not suggesting that just because a company buys Bitcoin that it's going to be on sale. Not suggesting that at all. This is just something that I'm watching. And one of the reasons why I'm specifying here that I'm not a CPA or a tax advisor is because of the last question that is probably popping into your head. What if Bitcoin goes, they buy it here, Bitcoin goes down, and then it goes back up? Well, I'm not exactly clear on this, because under generally accepted accounting principles, it looks like you cannot do a revaluation. However, you do get the deferred loss from that, meaning that in the end, the way that it should work out is that in the end, for tax purposes, you'll still be owing taxes on it from the point at which you bought it to the point at which you sold it. Here's an example of what I mean by that. You spend $1 million in year one. In year two, let's say it's worth $500,000. You're going to show a big loss on that, but you're not going to be able to take that loss for tax reasons. You're only going to show that loss to your shareholders. That's year two. So you've got a $500,000 deferred tax deduction that you're sitting on. You can't take it yet. Now, year three, the price goes up and it's worth $1.5 million, and you sell it. For reporting purposes to your shareholders, under GAAP, you've got $1 million gain from $500,000 all the way up to $1.5 million, because you actually realized it. You sold it now. From a tax perspective, you still have that gain of $1 million, but you have that $500,000 worth of deferred losses that you've been holding back that goes against that. And so in the end, your net real gain is still $500,000 in real terms, and that's how much you're going to owe taxes on. So from a tax perspective, in the end, still the only thing the IRS cares about, even for corporations, is what'd you buy it at, what'd you sell it at. It's not like they're getting extra tax bonuses, extra tax deductions, write-offs, anything like that. There's no tax loopholes here in putting Bitcoin on your balance sheet. But you could really see this starting to be employed as a strategy to temporarily push the prices down to capitalize on the volatility of the price of Bitcoin. And then if it goes back up, you all of a sudden have a massive surprise profit because you were able to sell at a large gain, and that shoots your share price straight into the stratosphere. Now, if you want a way to buy Bitcoin without having to pay taxes on any of your gains, whether or not you realize them, you can do so yourself. All you have to do is open up an IRA, a self-directed IRA with somebody who can custody cryptocurrencies. iTrust Capital is my favorite company who does this because, number one, self-directed IRAs are always extremely complex. They're complicated, they're old, they're archaic. Almost every single self-directed IRA out there, you have to fill out actual paperwork, many times even fax it in. They don't even allow you to scan and email or anything like that. The financial world has not caught up to modern technology with self-directed IRAs, except in the case of iTrust Capital. They've done a fantastic job building out their user interface, and you can buy Bitcoin in an IRA, traditional or Roth. You can move existing retirement account assets in that you can then sell and use those to purchase Bitcoin. And again, since it's in an IRA, the IRS doesn't care what you bought it at. They don't care what you sold it at. You can have as many gains as you want, and the IRS is never going to come cracking down on you because it's inside of an IRA. And as a bonus, you can actually hold allocated silver and allocated gold inside this IRA as well. If you're going to try them out, use my link in the description below so that you get your first month free. As always, I really appreciate you guys. Thanks so much for watching. Have a great day.